Hey, what up, everyone? It is the Satsmate Stack, and today I'm going to talk about why financial advisors they can't recommend Bitcoin, or they don't, or they're kind of sitting on their hands a bunch when it comes to this asset. Now, please share this podcast if you like it. I love all your support. I love the comments. Keep them coming. You guys are awesome. Now, I know many people that are in the traditional finance world, and furthermore, I was someone who was in the traditional finance world. I studied finance at university. I really get it. I get why advisors are hesitant. Now, I kind of came to this conclusion, and I could be wrong, but a lot of the people that are the most traditionally minded in finance, like these are the ones that studied at Wharton Finance or University of Illinois Finance, the guys that are very traditionally educated, they end up actually getting Bitcoin last. They're the ones that won't get it for a while. They have a lot of unlearning to do and relearning and biases and hubris. There's a lot that goes into why I think these people won't get Bitcoin for quite some time. And I know some people right now, and I won't name any names, but they openly acknowledge they don't get it, they don't want to get it, and they just want to stick to what they know, which is equities, bonds, the 60-40 portfolio, and that's just life. And guess what? They're going to get it at the price they deserve in terms of they may be buying Bitcoin at 500K, 750K, or even $1 million. So it's just one of those things where, a lot of these guys, they already have a lot of money, right? So they're not going to be hurting. I mean, their assets won't be going up as quick as those who are allocating, but they are doing just fine. And this will just be a lesson for them if Bitcoin does outperform. So historically, guys, there's been many reasons to why TradFi people didn't recommend Bitcoin. And that was because of the regulatory uncertainty. And as we can see right now through the Trump administration's moves and a lot of executive orders and crypto summits and all this stuff, we know right now that regulatory uncertainty is pretty much going away in the United States. Now, of course, 2028 can come and the opposite side of the aisle could get elected. But for right now, this regulatory uncertainty is more minimal, more muted. It's not as widespread. Now, there was a checkered past back with Bitcoin in the early 2010s. And a lot of the finance guys that I know, they always bring that up. Like, hey, isn't Bitcoin just used for money laundering and drugs and all that? Yeah, that was a misconception in the past. And that was a common medium of exchange or use case for it back in the day. But now it is used for much, much more than just that. And I think we're starting to see that shift. I mean, you're seeing like a lot of legitimate companies adopt Bitcoin. And because that, you're seeing it kind of become normalized. I went to the Bitcoin conference this past year in Nashville. A lot of the guys, they remind me of my parents or grandparents. You see older people there that are just, they're not the cypherpunk, the person, the shadowy supercoder. They're just the dad who has a nice house, a nice life, and he wants to maintain his wealth, right? So I'm starting to see the crowd shift a little bit, at least at those conferences. And that's been a big change since 2021, 2022. As well as, I think this is something to consider, but Bitcoin is pretty high volatility. And with that, I think a lot of the advisors, they feel like they can't expose their clients to the risk of this because some of them, they have shorter time horizons, or some of them, they just want steady number go up without big drawbacks or drawdowns. I get it. From someone who's traditionally minded, I have my stomach in my throat half the time watching the volatility in this asset. It took me a long time to actually kind of better appreciate it and not feel so nervous when the price goes down a bunch, because I can see that it is scary for some people. So, advisors, they feel that risk sometimes, I think, and they don't want to put their clients in a bad position. That could actually, potentially, they can get in a suit with their clients, but also you don't want to advise a grandma to put 10% of their portfolio in Bitcoin, and then you have a 2022 bear market, right? So, it's just something that you got to think about. And, I'm a guy that's been financially minded my whole life. I get it. And it cannot be valued the same way you value equities or bonds. It just can't. I mean, it's completely different. And I think family offices, they're caught in this weird holding pattern. How do we value it? Does it value like gold? Okay, does it value like equities or bonds? Or how do we value this thing? Real estate, it's valued as property. So I think they're in a situation where they're having a difficult time with the valuations of it because it's such a new thing. It's such a different thing. And that is something to consider as well. So I think, another thing that's causing advisors to not recommend Bitcoin, they can't do it without doing it on the ETFs. I mean, maybe there's some places now that do offer it that I'm unaware of, but a lot of them, they just offer the FBTC, the IBIT, the BitBs, the ETFs that give you that exposure to Bitcoin, but you don't actually hold the underlying. You hold a claim on the underlying, just like with the gold ETFs. You don't hold the gold, you hold a claim on the gold, right? So I think there's infrastructure gaps with actually getting real spot BTC exposure. And I think financial advisors, that's one thing that may be holding them back potentially. I think that one's less common though. I think genuinely they would just recommend the ETFs because I don't think they're self-custody advocates, but that is something to call out, is there are infrastructure gaps there. The next one, and this is actually one thing to think about too, is there is a pretty big reputational risk for a firm, right? So let's just say you're a firm, you have 500 million assets under management, and your advisors, they're not real Bitcoiners. I mean, they can read the periodicals, they could read a few paragraphs of what it is and the talking points. But if something bad happens in the industry, like what we saw in 2022 with the tremendous drawdown, I mean, this was like 70-80% drawdown from the highs. These advisors, they can't talk to a lot of these points as easily. Like the whole Celsius FTX Voyager mess. There was even more things, Three Arrows Capital. Like a lot of things hit the fan really quickly, and these advisors, I mean, this rabbit hole goes deep, guys. And I think there's that risk that they don't even want to be. They'll let someone else do it. I think that's how a lot of them look at this. They'll let someone else do it. Maybe they're going to miss out on some upside, but then they're going to avoid that brand name tear if things go wrong. So, I am a strong believer. I think this is going to change in this epoch up until 2028. I think we're going to see a lot more positive executive orders or positive legislation at the Senate and the House and signed into law. I think we're seeing more young advisors come to market. And these guys are traditionally educated, but also they're going against the grain, right? They see how difficult life is getting for those that don't have exposure. And I think this will really change. More clarity, more regulatory clarity will change the tides of why financial advisors can't recommend Bitcoin. So, and this is something to consider too, is like, let's just say everything goes perfect. Everything, all sales in the back, and all the firms are ready to go. They're going to do it in a slow drip fashion. They're going to be recommending the 1s, the 2s, the 3%. They're not going to be saying, hey, go put 25, 30% in. Because this is something where you got to be able to, they're going to want people to be safely allocated. Imagine if you're 55 years old and you see your portfolio go down 50%, right? And you have a huge portion of it. So if it's just 1 to 3%, that's fine, right? And so I think when the volatility goes down in Bitcoin, so right now it's pretty volatile, but let's just say 5 years down the road it's less. I can see advisors saying, hey, put 10, 20% in, right? Because you're not going to see 60, 70% drawdowns anymore, but you're probably not going to see 100%, 200% returns as much, right? That's the thing with volatility. It works on the downside and the upside. So overall, I think financial advisors, they're going to start to recommend Bitcoin in a slow drip manner. I think it's going to happen this epoch. I just think we're going to start to see it slowly. Just go to the Bitcoin conference this year, guys. You're going to see a lot of TradFi folks there. I saw it last year, and I saw a little bit the year before that, but it's changing. I think the investors are changing, the landscape's changing, and I think we're going to start to see it change in the better direction. And I think this is really good because now investors will get exposure to one of the best assets in the world, which is Bitcoin. So anyways, guys, please click the link below if you want a Fold credit card. It will help me out, but also click any of the links in the description below. Those things help me out. All your support's appreciated. You guys are helping me pursue my passion, and I hope you guys have a good rest of your day.